Hello and welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Friday morning and the cues coming out of SGX Nifty are pretty flat with a negative bias. And remember, yesterday we did shut shop at the lowest point of the day. So we'll have to see whether or not we can reverse the weakness that we saw in yesterday's session. Of course, over the next 30 minutes, we'll be talking about the cues for trade, stocks and news. And of course, we'll be getting all your stock-related queries answered by our experts. So if you have any queries, send them in to us on our YouTube feed as usual, and we'll have them addressed by our experts. But before we do all that, let's take a look at the top headlines at this hour. Mixed close on Wall Street, the Dow corrects, but the S&P 500 and Nasdaq snap a three-day losing streak. Meanwhile, markets in Europe end with losses after the Bank of England raises rates by a hawkish 50 basis points to fight stubbornly high inflation. Asian markets drift lower while the SGX Nifty is hinting at a mildly lower start for the Indian market. Well, a surprise hike by the Bank of England and indications of further hikes by the Fed reignite concerns of slower economic growth and lower oil demand. Crude cracks about 4% to slip around $74 a barrel. The hawkish tone from central bank also sees gold close at a fresh 3-month low. IT stocks may extend losses as Accenture cuts full-year guidance, signaling more pain for the sector in the coming quarters. And stocks in focus today, landmark cars as TPG Capital is likely to sell stake via block deal, Eros International as it comes under SEBI scanner, and BPCL as board considers fundraise via rights issue. The minutes of last monetary policy meeting pours cold water on any rate cut hopes. All three RBI members and two external members in the committee sound caution on inflation and want to move towards 4%. Only Ashima Goyal feels that the panel should not allow real rates to go too high. And Prime Minister Narendra Modi addresses the US Congress in a historic speech punctuated by multiple standing ovations. Says India will soon be the world's third largest economy. Both leaders also attend a state dinner graced by business personalities including Mukesh Ambani, Anand Mahindra and Google boss Sundar Pichai among 200 other dignitaries. Well, let's bring on board then Mitul Shah, who's the head of research at Reliance Securities, to talk about, the IT stocks, given the fact that Accenture has cut the higher end of its guidance once again. Good morning, Mitul. Good to have you on the show. Accenture's revenues were rather in line, and but the disappointment was the fact that, it has cut its guidance, full year guidance to 8 to 9% versus 8 to 10% earlier. In fact, even last quarter, they had cut their guidance. So, do you think this comes as a negative surprise for the IT stocks? And after this week's outperformance, the IT stocks are in for, some bit of selling in today's session?
Yeah, hi, good morning. Yes, as you pointed out rightly, this Accenture result in terms of revenues profitability was more or less in line, but guidance came in as a definitely negative surprise. Though street was kind of a cautious across IT space since last 2-3 quarters, but again this time because last quarter also they reduced their revenue guidance by 1 percentage point. This time also similar range is reduced close to now 9%, but probably it would end up at 8% kind of a growth only. So certainly it is much lower than the expectation. But key point here to note down here is that within these verticals, BFSI segment is facing more challenge, which is already reflected in this result. And another point is that their deal pipeline or order wins are coming down. So this time it has further reduced Q on Q also. So that is indicating some challenges. On the other hand, in terms of geography wise, again, North America is finding more difficulty, which we have seen in the Q3, Q4 results of all the Indian IT companies. But that trend seems to be continued even in this last month of April, May also. So that is why we believe that Indian IT space will also has a reflection of this in the stock prices today.
Right. The view on IT stocks per se is pretty divided. A lot of people believe that the correction may have been it has come to the end. But a lot of people see more downside on IT stocks given the fact that, of course, the demand factor and, the order book picture, all that remains uncertain in the wake of, slowdown in the US. So would you say that most of the selling is over in the IT stocks, or should we brace for some more in the coming days? And when that happens, should one look at buying into some of these stocks for the long term?
So if we look at Q4 result of all these companies, there was a kind of a purely mixed performance. Few companies like HCL Tech has reflected a strong resilience in terms of the revenue decline, or revenues came in as a flat Q on Q, whereas negative surprises came for TCS, Infosys in terms of the decline in the revenues or much below expectation. So similar trend or kind of a cautious thing we believe to continue at least for next 1 to 2 quarters. But yes, in terms of stock prices and valuation, these stocks are now started trading close to their historical averages. But still, it is not going below the historical average. So we would not say that it is trading at attractive valuation. The valuation is now more or less at fair value, or so in other words, we can say that it is slowly now bottoming out and at a decline, or maybe probably next 1 or 2 quarters, one should pick up the or select the right stock in this in considering their valuation and potential.
When we say select the right stocks, do you prefer large cap over mid cap, or it's the other way around now?
No, we prefer large cap because we believe that whenever any turnaround or a improvement, strong recovery will happen, the large cap will witness faster recovery, or initial improvement will see in the large cap. Then only this mid cap will improve with some lag effect.
Right. With that, Mitul, thanks a lot for taking out time and joining in this morning and sharing your thoughts about IT stocks. Well, on that note, let's also get on board Raja Venkatraman of Neotrader, who's joining in this morning. Well, good morning, Raja. We've seen that the Nifty has come within striking distance of its all-time high, but it hasn't really managed to edge past that. And yesterday, of course, we saw the Nifty come under a fair bit of selling pressure. Would you say that, a lot of this is attributed to the weekly expiry, and today the bulls may manage to stage a comeback? And also, support-wise, do you think 18,660 is the key level to watch out for on the Nifty now? That was the yesterday's low.
Yeah, good morning, Nandita. The way the markets have been behaving, it's clearly evident that yes, it wants to flash a new high before it does whatever it wants to. But the higher levels are continuously attracting supply. And what I can see from the overall setup and the kind of sentiments which are emerging, yes, the sentiments are definitely encouraging, and the kind of FI inflows which are coming into our markets are also quite phenomenal. But then what we really need to see is the kind of stretch which we are getting into could probably take a breather or snap out, and the high which we are expecting is going to become a challenge right now. So yes, at new highs, people will definitely tend to participate on a larger level. What I would say is do exercise some caution, and the main key player in this entire broader indices theory is that the bank Nifty, right? Yesterday, bank Nifty showed some semblance of moving above 44,000, and yesterday was an extremely volatile day. And what we really need to see is bank Nifty closing above 44,000 on a resounding basis on an end of day basis. Otherwise, you're going to experience some pressure, and the reversal from here could be quite sharp. And like you rightly said, 18,700 to 750 is a very important support zone. And now what I'm noticing is bank Nifty has been pretty much in a range bound scenario between 43,500 and 44,000. But Nifty is seen to be giving up. So yes, while we are expecting an upside and a new high, we also need to be very cautious here, because the reversal from here could be quite sharp.
Right, I think there's some bit of an audio issue that we want to fix up on your end, Raja. Stay on with us. But let me talk about the stocks that will be in focus in today's session. First on my list is Landmark Cars, and that, according to me, would be the stock of the day aside of the IT stocks, of course. Now, sources suggest that TPG Capital is likely to sell an 11% stake in the company via a block deal. And this is likely to take place at a 0 to 5% discount to current market price. So this stock will be in focus. Remember, a lot of action has been witnessed when it comes to stake sales and a lot of block deals. We've seen a lot of block deals this week, and this one will be taking place today. Aside of that, another stock that will be in focus, and which is of course the top brokerage call for the day. UBS has downgraded Voltas to neutral. In fact, target has been cut to 840 rupees from 1200 rupees a share. UBS believes that industry blues will persist and market share scale up will be a tough task when it comes to Voltas. In fact, it believes that rising competition will keep margins under pressure for this company, and it has also cut FY24, FY25 earnings estimate by 22% and 31% for this stock. Given the fact that Voltas, the demand, in fact, amid the heat wave, the demand picture will be improving for Voltas, but it's the rising competition that is something that will weigh in on the stock prices going forward. That is the view coming in from UBS. But let me get back Raja and ask him his views on these two stocks. Landmark Cars, I think on a YTD basis, this stock has done pretty well. But over the last 1 month or thereabouts, it has come under a fair bit of pressure. Today, this news flow of a block deal taking place in the counter is there. How should one approach Landmark Cars? What are the charts saying on this one?
The overall sentiment on the auto sector has been quite positive. So the move was quite extensive, and this definitely moved quite well. But what we are noting right now is that there is continuous profit booking witnessing at higher levels. So one should ensure that they get out of the stock, because the stock seems to be headed lower, and the lower levels are emerging around 570, so which could see a very sharp decline.
Right. And what about Voltas? There's been a UBS downgrade on the stock, and target price has been cut from 1200 to somewhere around 840 or thereabouts. Over the last 5 days, the stock is down 2% or so. And in fact, if it goes further down, it may in fact hit its 52-week low as well. So should one look at Voltas right now, or just avoid it at the current juncture?
Yeah, so when you take a look at Voltas, Voltas has been trying to generate some momentum, but then what you are noting now is that the stock has hit a rough patch now, and the momentum is to the downside. So any selling pressure which comes into the market in the next few days could definitely drag this stock lower. So you should look at it from a short perspective.
Right. I think L&T is another stock in focus. You're getting quite a few queries on our live feed on L&T. I think this stock had hit a 52-week high yesterday, and it was among the top gainers on the index. Surya Prakash wants to know your thoughts on L&T and what should be done. So if a short-term trader wants to take positions into the stock, what is the target level he should be watching out for?
See, the large caps have not been performing. So if you're looking at a stock like L&T, you should understand that now if you're going to enter the trade afresh, you're expecting that the stock to trade further higher. So yes, the stock is definitely encouraging, and one needs to maintain a stop below 2380, because if that level is given away, then it could indicate a reversal. But then stock is definitely on the positive side. I expect a target of around 2460 to 2480 on a intraday or a multi-day basis.
Right. And what's your view on sugar stocks, Raja? Most of these stocks are at a 4-month high, concerns over El Nino and, demand coming, going up and production going down. So basically, demand supply equation is boding well for some of these sugar stocks. How should one position themselves? Should one buy into them right now, given the fact that, the threat of El Nino looms large, and that could actually bode well for some of these sugar stocks?
Yeah, see, the sugar stocks have been waxing and waning, and there has not been a really clear trend which is emerging. Though there have been a lot of impetus from the government, a lot of incentives from the government into this sector, and it's one of the most actively tracked sector, but often out of purview of the normal large caps and the mid caps which we have been following. But yes, there are a lot of activity happening in the sugar stocks. So one could look at sugar stocks and apportion some part of their capital, but then one needs to understand that majority of them are in the mid cap space. So if you're going to participate now afresh in the mid cap space, then I would advise that hold on and await some clarity in the market before you proceed.
Right, that's the view on the sugar stocks. Then another stock that will be in focus will be BPCL. The board will be considering fundraise via a rights issue. Stock is very close to its 52-week highs. Chartically, are you looking at higher highs on this stock?
I would say that BPCL amongst the energy counters, BPCL has been a much better bet. But then it takes its own while to go up. And if you see the entire price trajectory, majority of the time the movement has been it's a laggard. So if you're looking at it from an investment point of view and looking for the next say maybe 6 to 8 months, then this is a good time to invest into BPCL. Otherwise, it's better to trade it on an intraday basis.
All right, that's the view on BPCL. Let's talk about Craftsman Auto. Yesterday, there was a block deal in the counter. In fact, some marquee names have picked up stake. Goldman Sachs, Axis Mutual Fund, among others, have bought somewhere around 3% stake in the counter. Craftsman, how does that look to you?
See, this particular stock has moved up quite well, and ever since its move in the month of May, it actually able to move above its important resistance zone around 3600. But now what I feel is that there could be some correction here, and again one could consider buying it at around 3600. But now it would not be a good time to enter into it.
Not a good time to enter. What about delivery? There was a block deal in this counter as well. The names that are emerging which have bought into the counter are Norges Bank. That's picked up somewhere around 156 crore shares, and Carlyle Group, of course, has exited stake in the company. Among the logistic plays, which one would you prefer now? Would you advise investors to pick up a delivery, given the fact that it has staged a good recovery this year? Over the last 5 days, it has seen some dip, but would you advise investors to use this dip and buy into the stock?
Right. So this is a counter which we had discussed a few sessions ago, and at that time the prices were languishing around around 300 to 320. Now the stock has made a good base right now, and it's in its attempt to recover. So some positive news flows are also emerging. So this could be a good time to accumulate into this counter. But then one should note that this stock has not had a good history. So and the kind of fall which it has witnessed, you could have people coming in to exit at higher levels. So one should enter into this trade with that premise. So higher levels are emerging around 500 to 525.
All right, that's the view then. Let's take up a query on Shree Cements. This one is coming in from Praveen Kumar, and he wants to know what he should be doing with this counter. Shree Cements, the stock was pretty flat in yesterday's session, and over the last 5 days, it has been in a steady downtrend itself. Among the cement plays, is it time to look at players like Shree Cement, or should somebody look at the likes of Ambuja and ACC?
Yeah, Shree Cement has definitely encountered a roadblock, and around 26,000, the roadblock exists around 26,000, and it's almost a very, very strong resistance zone. So as long as this resistance zone is not overcome, one should not participate afresh. But then if you're continuing to hold on, you could maintain a revised stop loss at around 25,300 and continue to hold on to this trade.
Right, that's the view on the cement space. Then I am getting another query on IDFC First Bank. Yesterday, the stock was down somewhere around 5% or thereabouts after a CLSA downgrade. Kishore wants to know your thoughts on this stock. How should one accumulate this one, or should one look at other banks like IndusInd or even something like a PSU bank vis-a-vis private bank? What would you advise investors to do on this one?
Yeah, so the kind of move which we are witnessing in this bank, it's clear that there is a possibility of a decline that is emerging right now. So one should await some clarity as far as the banking space is concerned, because it's not a time to accumulate here, because the nearest point of accumulation is around 70. So I would wait for a dip towards 70 for me to consider any kind of accumulation.
All right, that's the view on the banking space. Then we have a query coming in from Abhilash, wants to know your thoughts on the pharma pack, particularly Laurus Labs. should one look at this one, or given the fact that Laurus Labs has seen a 4% cut this week, and it's quite a distance away from its 52-week highs. Should one utilize some of these dips to take positions in this counter for the short term, or would you advise investors to buy into it and hold on for the long term?
Yeah, so the move which it has witnessed in the last 1 month has been quite prolific, and right now what you are seeing is some profit booking. This stock cannot override the fact that there are bearish overhang in this stock. So I would advise that one should look at it from a short perspective, because the momentums are also seen giving up.
All right, that's the view then. Let's talk about Radiant Cash. That's the next query coming in from Pankaj Puri. He holds 2,000 shares at the rate of 98 rupees a share. He's making a slight bit of loss here. Would you advise him to exit or hold on to it and wait for some bit of an uptick to exit?
Yeah, pardon, I didn't get the name of the counter which you're asking.
Radiant Cash.
Okay. So this particular counter is trying its best to move up, but then what's happening is that the attempt to move higher is witnessing some continuous resistance zone. So I would be very careful to participate in this counter, and if you are nearing your entry point, if you're nearing an entry point, then you could look to exit this counter.
All right, I think we just have just about time for one last query. This one is coming in on Piramal Enterprises from Satya CK. And, over the last 5 days, this stock has gained 19%. It was, of course, in news because it has exited its stake in, one of the companies. 52-week highs is still a long time, in fact, a long way from here. But would you advise investors to now look at this stock at the current levels and hold on to it?
See, the surprise news of their stakeholding in Shriram Finance did give it that exciting jump. But then, considering the nature of the market right now, buying or investing into the current juncture would not be the right approach, because there is a sufficient amount of gap which is there around 840 to around 900. So that could be a zone where the prices could retest, and that is the time when one should be buying into the stock. Yes, the momentum has definitely changed for the better. So one should consider the stock, but then look for some dips to buy into rather than buying it at current levels.
All right, buy Piramal Enterprises on dips rather than buying at current level. That's the call. I think with that we've come to the end of this query segment. But Raja, any recommendations for our viewers this morning?
Yeah, I would like to go in with a long as well as a short, and considering the extent of move which we are seeing in the real estate space, I find that the Oberoi Realty has heated up and it's giving a pullback. So it would be a good time to short this candidate. So sell in a Oberoi Realty at around 991 with a stop at 1005 for a target of 975 and 965. And we saw some late movements yesterday in UBL. So I would recommend a buy in UBL at around 1508 with a stop at 1490 with a target of 1535 and 1550.
All right, a sell call on Oberoi Realty and a buy call on UBL. With that, Raja, thanks a lot for taking out time and joining in this morning and addressing all of your queries as well. Well, with that, we've come to the end of this edition of Morning Trade. But don't go anywhere, because coming up next is Opening Bell. Stay tuned and you have a very happy weekend. Thanks a lot for watching.